Hey guys, today I'm going to be talking about Wirecard. And most importantly, I'm going to be discussing what's happening with their stock right now at this moment. And also, I'm going to be talking about specific stocks that are looking to benefit from what's happening with Wirecard right now and how you as an investor can actually tap into that. So stick with me in this video and I'm going to explain you everything. But before guys, if you're interested in investing and you want to master it for yourself, do me a favor, subscribe to this channel and hit that bell notification so that I can help you in mastering investing for yourself. Okay guys, let me just explain a little bit about what's happening right now with the Wirecard stock and the current situation. Right now, actually, their stock price is jumping up a lot because a lot of investors are buying into this stock because they think that the stock is going to rise again and actually survive what's happening right now with this company. So when people were buying this stock and that it was going up, one specific thing actually happened, and is that the UK regulators froze the Wirecard's assets. And that was very important because that's where their debit card facilities were, meaning that any company that was using Wirecard services and their debit cards was basically no longer able to use this, which basically means all of the people that had money on Wirecard cards or people that were using the Wirecard services weren't able to access their money. And what do you think that people do when you see that your card is no longer working? And the moment that your card gets defrozen, what do you think is going to happen with all of these people? They're going to take away their money. They're going to jump ship. They're going to get out as quickly as possible. That makes sense, right? If you have money on the bank and one day you try to log in on your bank and you can't even access your bank, you're going to think, okay, I need to get my money out of here as quick as possible. So basically what's happening now is a modern day bank run. People are running away from Wirecard as quickly as possible and all the services that are connected to it because they cannot trust that their money is going to be safe. So this is one thing that you need to look into specifically when you're buying this stock right now, and that is very worrisome. This can actually lead to a lot of issues with Wirecard, and I really think that the company will not survive this kind of reputational damage. Now let me ask you a question. They lost $2.1 billion worth of assets. Now, their debit cards were not working. Recently, they were activated again, but were not working for a while. People were jumping ship as quick as possible. And in the article that you can see right here, do you think this company is going to survive with the reputational damage that they have? No, probably not. So investing into this company right now is not a good idea because the reputation that the finance company needs to have needs to be extremely high. If they lose this reputation, people jump ship. This is the very first thing that people do. Bank runs in the beginning of last century were a very big thing because people didn't trust their banks and their money was safe on it. So if you don't trust your bank and that your money is safe on it, you're going to try to get your money away as quick as possible. And with the loss of $2.1 billion that this company had on their balance sheet, plus the loss of customers that they're going to get because of this freeze of their accounts, is going to be huge and is a very underestimated effect of what's going on with this specific company. Now that's enough about Wirecard. I already talked about that quite so much in my other video, but let's start talking about where the opportunities are right now. Wirecard is going to have a very difficult time and probably not going to survive, as I already mentioned. So which companies are actually going to benefit from this? That's what I'm going to be talking about right now. Now, in my opinion, there are four main companies that are looking to gain from this. Let's start with the biggest one, Ajin. It's basically the Dutch pride of the fintech world, and it's a very big company and it's been existing already since 1999, and their growth is very impressive overall. They're very well positioned to have a very good amount of growth from what's happening with Wirecard, specifically in the corporate side of clientele that Wirecard has, because Ajin provides a very similar service to them. But the biggest thing that I do not like about Ajin is that their stock is hugely overpriced. It is massively overpriced. They have a price to earnings ratio of 194. And a price to earnings ratio basically means that you pay 194 times for the earnings of the company. And a forward price to earnings ratio of 144. And a forward price to earnings ratio is basically what the company is expected to earn in the future, next year, and you're still paying 144 times that earnings price, which is just insane for a company to be buying a company on. And it's definitely not a stingy Dutch guy like me that is going to be buying a company like this, because I don't like paying for things that are overpriced. I like paying for things that are underpriced. That's the way to do it as a Dutch guy. And even their CEOs that are Dutch are selling the company stocks right now. They are saying that it is too risky to build in this portfolio. Let me just look exactly at what they're saying. The reason for the sale is to diversify their portfolios and reduce single stock risk. In other words, how this is translated by a Dutch guy: who the hell is buying our stock right now? Are these people crazy? I'm going to get out because this price is way overvalued towards what I think is actually going to be valued. So if you're an Ajin investor or looking to invest in Ajin, I do not recommend it personally. It's a great company, but their price is way overvalued towards what I like. So let's skip Ajin, shall we? Second company we have is Intelligent System Corporations. INS is the ticker. Now their PE ratio right now is higher than what I would like. Their growth rate is very, very well and very nice. And if I'm looking at their future growth rate, they're actually looking to grow at quite a rate. So overall, this company looks quite well. Now guys, when I was doing my due diligence about this company, I came up to a huge red flag. And that's something that I want to highlight here, is that this company actually has a lawsuit pending towards them for one of their management members in the team that they have, and that is a very big red flag for me. And basically what they're saying is that there is a lawsuit, and according to the complaint, this company made false and misleading statement to the market. Parker Petit, the financial expert on intelligent systems audit committee, engaged in accounting fraud while serving as the CEO of MyMedX Group. So, where does this sound familiar to you? Accounting fraud? Wirecard? This company? I don't want to invest in the companies that have a questionable leadership, and this is the specific case that has that with as well. So let's not invest into this specific company, and let's skip this one too. Now, up next are the companies I actually liked. Companies that I thought, okay, they have a very good potential, they have good growth, and they're companies that are well positioned to grow and benefit from this specific situation with Wirecard. I guess one of these companies was actually recommended by one of the commenters, which made me do some more research about it, which I'll pop up right here. And specifically, if you guys have any questions about specific companies that you want me to look at, please let me know down in the comment section, and I'll do my best to get by them all and take a look at them for you. PaySign, and that is ticker PAYS. This company has a very good growth right now. It's looking to grow a lot. And one thing that I like a lot is that it is very focused on the US market. So they've been pushing very heavily to grow from the US market alone. And this company with their debit card solution is very similar to that of Wirecard. So they're going to be looking to benefit from this a lot. Now guys, this company has an extremely high PE ratio of 63, which is much higher than what I would like to invest in, specifically if I'm looking for undervalued stocks. But as I mentioned, their growth is very high, and they're looking to have a very good growth already in the next coming year. So they're very well positioned already with the growth of next year and the current growth to be a very good, considerable stock if you're looking for a risky growth investment stock. Now, this is definitely not a sure winner, so there is a lot of risk with investing into this stock, but because of their very aggressive growth that they're aiming towards, if you invest into this company right now, it could turn out to be a very good investment. But if you're more of a value investor or more of a defensive investor, this is definitely not a stock that you want to be looking at. This is more for the aggressive type of investor that is looking for high risk, high return types of stocks. Last, I want to talk about a company called Green Dot Corporation with the ticker symbol GDOT. Now, I do like this company a lot more from a value perspective than I would take a look at PAYS. PAYS is much more of a growth stock than of a value stock. Now, I like this company a lot. Now, I've been looking at their financials, everything looks good, their growth looks good, but they're definitely not growing at the same rate as PAYS does. This is more of a company that has a longer track record, but their growth is not as substantial. Now, in this sector specifically, I would be looking more for a growth kind of stock, not more of a value stock, because there's so many more competitors out here. Growing your market share is going to be one of the most important things to make sure that you solidify your base than having a long track record as a business. If I would take a look at these two different stocks right now, I would go more and aim more towards the company PAYS. I still do like Green Dot, so if you're looking to invest into this sector and you want to have more of a safe bet, then Green Dot Corporations is definitely the one you want to be looking at. Overall, their financials look very well and all the other aspects look very well. But if you're looking to benefit from the situation right now with a growth stock and you're more of a risky type of investor, then definitely go with pace. Now guys, which one would you want to choose? And do you agree with my assessment? Let me know in the comment section. Let me know what you think. And I'm really intrigued to find out what my viewers think about my analysis about this current situation. And I hope this is helping you out. And guys, if you're interested in this type of content, I'm gonna link a couple videos up right here so that you can take a look for yourself on how to do these kind of analysis. And of course, subscribe to this channel and hit that bell notification so that I can grow this channel and help more people out in mastering investing. Till next time.